Good morning, welcome to ANZ News this Thursday, 20th of August 2020. Continuing on with more Fed stories today, we want more. The Fed spoils the party. Last night, the Fed released the minutes of its last meeting and the market reaction was harsh. Basically, everything sold off, barring the US dollar. Gold and silver were the worst hit, down 3.2% and 4.2% respectively. So what did this say to cause the reaction? Firstly, let's look at the language the Fed is using to describe the biggest economy in the world. Members agreed that the ongoing public health crisis would weigh heavily on economic activity, employment and inflation in the near term, and was posing considerable risk to the economic outlook over the medium term. They called the uncertainty surrounding the economic outlook as very elevated, and said the risks included additional waves of outbreaks and the possibility that the government's fiscal support for households, businesses and state and local governments might not be enough. Some mentioned that banks and other financial institutions could come under significant stress if more adverse scenarios unfold regarding the spread of the virus. Further, the pace of employment gains likely slowed from May and June, they said, and they saw the labour market as a long way from full recovery, even after the positive May and June employment reports. So, in essence, not getting better, and indeed plenty of downside risk. One positive was the jump in household spending, recovering around half of its previous decline, but even that was caveated as supported by the government handouts being spent. However, inflation continues to be nowhere near their 2% target. Check out this next graph here, showing how they're falling short with inflation. There was also no sign of easing up the stimulus train, with rates held at near zero and maintaining their $120 billion per month Treasury and mortgage-backed securities buy-up, and no end articulated. So understandably, some semblance of fundamentals in shares falling on confirmation the economy is bad and possibly getting worse. But why would gold, silver and bonds fall? It seems it is largely due to the Fed not giving more guidance on increased MOAR or MOAR stimulus, which many were expecting after comments in the last meeting, and also they're dismissing the notion of yield curve control, or YCC, as the next tool. So firstly, the Fed, God forbid, had decided not to try to jawbone the market higher with talk of more stimulus, but also start to discuss how on earth they could communicate to the market raising rates when the time comes, and how to know when that time had come. On the YCC, the minutes revealed, of those participants who discussed the option, most judged that yield caps and targets would likely provide only modest benefits in the current environment, as the committee's forward guidance regarding the path of the federal funds rate already appealed highly credible and longer-term interest rates were already low. We explained YCC, or yield curve control, back in June. Only Japan and Australia are implementing it. The Fed are basically saying they don't need to, as their rates are already near zero bound. And as previously outlined, they are still buying up to $120 billion per month without it. We have reached peak insanity, and the Fed reliance, when the market reacts like this, when an already unprecedented stimulus package is not unprecedented enough. Nothing changed last night. We argue pretty vigorously that funds haven't been flowing into gold and silver on the premise of YCC and even more stimulus coming, but rather the amount happening now. We'd also argue just as vigorously that if and when the economy gets worse, the Fed chose its words very carefully to open the floodgates further and won't hesitate. And finally, don't discount the notion that Fed Chairman Powell wouldn't secretly love to see US shares crash leading into November's election after enduring being Trump's punching bag for the last couple of years. When something doesn't make sense causing a dip, it could really be a dip worth buying. And that's news for today. Jump into ainsleyBullion.com.au for all things gold and silver, ainsleywealth.com.au for all things cryptocurrency, and our gold and silver backed token over at goldsilverstandard.com. Available through Ainsley Wealth and also CoinSpot for your convenience. We'll catch you tomorrow.